Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. If you are new to investing and so far all you've done is just buy individual stocks, there are other options out there. You can actually invest in ETFs. ETFs are a basket of stocks that trade under the one umbrella or one ticker. It could be hundreds of companies. So if you are new to investing and you really want to invest in the stock market, but you're finding it challenging to find individual stocks that are undervalued, researching about individual companies, it might be easier, just to put your money into an ETF and completely forget about it. Because you don't have to do the research, they do the research for you, but you have to pay just some sort of expense ratio. And today's video, we're looking at one of the new ETFs, in the UK. This was suggested by one of the community members recently. So I looked into it and it seems interesting. So we're going to look at that. So far, because it's very new in terms of performance, we can't really compare it to anything else. But in terms of expense ratio, the companies that are involved, how diversified it is, all of that things, that's what we're going to look at. And this is this is one of those situations where if you are new to the market, or even if you are someone who's been investing in the stock market for a while, it might be a good idea just to add this to your portfolio and just completely forget about it. Remember, I'm not a financial advisor. I'm not saying you have to do this, but it's a good idea if you are really new or you don't have the time. And some of you have actually already said this to me, that you don't have the time to actually research individual stocks. Like, I love doing that. But some of you said, you know what, I don't have the time. I don't want to worry about that. I want to buy a basket of companies within an ETF and forget about them. And that, for you, that's perfectly fine. I do own some ETFs and we'll talk about this later. But generally, I like investing in individual stocks. So let's have a look at the actual thing. So called Invesco Dow Jones Islamic Global Developed Markets. It basically currently trading under the ticker IGDA, and that you can find it in the London Exchange. Now there are some companies or brokers that are offering this and some that are not offering yet. I'm sure in the next few months, hopefully, they will start. A lot of the big boys will start doing that. It's not available under through Trading 212 or Freetrade yet, but I know AJ Bell has one, so we'll look at that in a bit as well. So this ETF you would have to pay 0.40% every single year. That's the expense ratio for this ETF. So it's not actually bad. Some of the ones that we've seen so far go up to all the way 1. The ones that I've invested in, they have 0.5, 0.6, 0.8 if you like. So this seems a lot cheaper. In terms of assets under management, they have over 200 million at the moment, which tells us it's all right. It's getting there, hopefully in the next few months. So one of the things that you were looking for, basically you need to look at when you look at ETFs, especially Islamic ones, find out if they have some sort of a certificate. And these guys seem to have one. So it's got 2021 Sharia compliance certificate. And when you click that, it takes you to this thing here, if I can find it. And you've got a lot of information here. They talk about what ETF is and all that is. And then in somewhere around here, it says basically it will be managed in accordance with the Sharia principles. And then what are the Sharia principles? They've talked about here the equity side of things, types of securities, and then they've talked about this basically such activities include industries including alcohol, tobacco, and so on and so on. So if they've got a bit more information in there, so what's exempt from that list and so on. So if you're interested and you want to invest in this, have a look at that. So again, another thing they talked about is the debt side of things. So all of the following must be less than 33%. So the debt and so on. So all of these things. Now, when you see this, right, some people will argue with you about all sorts of things. Now, for me, the people that have signed this thing, right, let's go back to the top. So the people that approved it, so Dr. Muhammad Ali Al-Ghari is part of the Almania advisors. He's one of them. There's 4 others who also signed this thing. All 4 of them are involved in this. Now, who are they? go and find out a bit more information about their website. I will put the link in the description so you can find it out for yourself. Some of them are basic work in Islamic economics kind of things. Basically, they worked in the University of King Abdulaziz University in Saudi Arabia. They worked in different places. They have a different backgrounds and so on. Am I more knowledgeable about than these people? Absolutely no. Okay, they're the ones who are coming up with this. They have, I'm sure, hundreds of years of experience in doing these kind of things collectively. So who am I just to question these kind of things? I am not a scholar. Okay, I wish I was. Okay, they have a lot more knowledge than I do. So what do? I actually listen to their advice, and not only them, there are others as well. Okay, so there's loads of different websites you can go. One of them, actually, Dr. Muhammad Al-Ghari is actually part of the AAOIFI group as well. Who are these people? Again, go and find out a bit more information about them. There's links to every single one of them. So these are the people that are coming up with this, basically the Sharia board members. Okay, now that's all I have to say about this. I am not saying these things are 100,000% Sharia compliant, whatever, but based on the advice from these people who have a lot more knowledge in Islamic finance, I will be happy to invest in these ETFs that they've actually recommended. In terms of investment, it's up to you. But in terms of compliance and Sharia compliance side of things, I will be happy to invest in this. Right, so let's carry on and have a look at the ETF. So like I said, in terms of expense ratio is 0.40, the asset under management. Let's have a look at the breakdown. Okay, so in terms of the breakdown, you can see the sectors, they've got a lot more information technology. So 33% is information technology. Healthcare is about 16%, consumer discretionary is about 13%, industrials 10%, consumer staples about 7%, communication about 6.5%, which is interesting because I can't find a lot of the, although all of them will not be Sharia compliant, but some of the communication services are not really compliant. The other mistake people make as well is you're looking at the whole ETF when you're thinking about the compliance side of things, and like this whole thing becomes one stock, and then based on that they look at the ratios and the basically the criteria that they meet. So not individual stocks. Okay, so they're not looking at just one individual stock and saying, okay, is that one compliant, is that one compliant? They're looking at the whole basket, although they will basically will not invest anything that invests in things like the tobaccos and all that stuff. Okay, gambling and so on. So materials 5.7, 5.8 for the rest of them. And then when you look at the exposure, okay, in terms of globally, look at that, 75% of it is United States. Okay, that's quite high for me. Okay, although the US market is great, and probably if you look at my portfolio, you're probably about 70-80%, but that's for an ETF, that's quite a lot. Okay, especially an ETF that's supposed to be global. Okay, Japan almost 5%, Switzerland about 4%, United Kingdom, I would have liked this maybe a little bit more than actually almost 3%, 2% France, Australia about 2%, South Korea about 2%, and then the rest is about 8%. Okay, now we're going to look at the individual stocks. Right, so these are the individual stocks here. So Apple, 7%, over 7% just for Apple. So the weighting, right? Microsoft, almost 6%. Amazon, 3.5% or 6, almost a 4%. Tesla, 2%. Alphabet, both Alphabet, so class A and C both included. So that's almost 4% just for Google. Okay, the parent company of Google. Nvidia, 1.4. J&J, 1.3. Meta or Facebook, 1.2. And then Procter & Gamble, 1%. Now, top 10. Okay, look at that. I really don't like the fact that Apple and Microsoft are the two of the biggest holdings in this. Okay, I would have liked if this was 2% each or 3% each, even 4% each is fine. Nothing more than that, and then spread it around. And I will show you in a second. By the way, I've just checked Apple today on the Zoya. Something has changed because it's no longer questionable. That's very interesting. Okay, so check that out. Apple is no longer questionable when it comes to Zoya. Okay, So something has changed, and I don't think a lot has changed because they're releasing their earnings report next week. So we'll see what happens with that. Anyway, so let's now look at I've downloaded the file. So when you're looking at this thing, right, there's a file there, download construed. So when you click that link, this is what you get. And I've highlighted the top 10 in yellow. And as you can see, the 7%, blah, blah, blah. And then you've got 1% for ExxonMobil, Nestle, and then Visa. And then the rest of the stocks, and there's so many of them, right, are under 1%. Now, when I looked at the top 100 companies, there were not a lot of companies in here that were not Sharia compliant. So Exxon was fine, Nestle, Visa, Home Depot, Chevron, MasterCard, Samsung, Pfizer, Roger, and ASML, which is a great company. We'll talk about that in possibly next video. Coca-Cola, Broadcom, PepsiCo. Walmart is the only one that I have a question about. The rest of them are actually quite basically fine. There's not a lot of companies in here that are not Sharia compliant right now. Okay, although even I thought that was United Health, but that's not. So you've got so many companies here that are actually Sharia compliant. Prologis is actually not. Is not compliant. But remember, they're not looking at they're looking at the entire thing as a one stock rather than just individual stocks or whatever. So it's really very well diversified in terms of stocks. But I would have loved, the only criticism that I have about this thing is the fact that the top 3 or 4 is actually quite heavy. So I think it was about 20 something percent. Let me just check. Yeah, so that's 28%. So 28% is basically the top 10 holdings. And yeah, although that's fine, okay, but you would have liked this to be about 2-3%, because what happens, I'm sure Apple is not going to go down, whatever, but if you lose 7%, over 7% of your investment, if something happens to Apple tomorrow, which I doubt it will happen, because I think looking at the top 10, you can see these are quality companies. They're not going to go basically away anytime soon. I found this link I think was on Morningstar, which was quite nice to actually see in terms of breakdown. So you've got cyclicals, which is materials, consumer cyclicals, financial services, and real estate, okay, make up about 23%. 51% was sensitive. So in terms of these other companies that have so the energies, for example, the industrial, the technologies, communication services are a little bit more sensitive kind of thing, companies. And then you got the defensive, okay, consumer defensive, when basically sensitive, and the cyclicals are when the markets are not doing really well and the economy, is not doing really well. These are the companies that will be affected in a way, okay? Then you got the defensive, which is very good in terms of things that we really need. So consumer defensive, when you go to the grocery stores, the Procters and Gambles are included in that. The healthcare, you know what healthcare is, everyone needs that. Utilities, we all need to have our utilities bill, right? We pay our utility bills regardless of what's happening in the markets. So yeah, that's kind of like a little breakdown, and then you've got another little bit more breakdown on the basically world regions and so on. So overall, I genuinely think this is a great one. The only issue I have is the breakdown of the weightings of the companies in there, and that leads me to this thing here. Now, yesterday was Friday, so Friday the markets were down quite a bit, and guess what happened? This stock, basically this ETF, was down 3%, over 3%. Generally the markets were down way less than that, but because of the top 10 companies are all like very much into tech companies. So you got the Apples, the Microsoft, the Amazons, the Teslas, Alphabet, Nvidia, and then Meta. All of these, apart from J&J and Procter & Gamble, they are very, very tech heavy. And for that reason, it was down quite a bit. But if you're young and you've got long-term horizon, whatever, then this might be the right ETF for you. Okay, this might be actually a good ETF for you because you're thinking about the long term. You're not just worried about what might happen tomorrow and so on. So generally, I think this is great, but performance-wise, there's nothing to compare. Okay, basically, it only started 2022, so we will have to wait this time next year. If you already invested, so you just have to wait and see what happens in the next couple of years, to be honest, because it only started January 7th of January this year. And that's my take on this ETF. I don't have a lot to add to. It seems really good. I mean, very much in terms of globally diversified, it's not great. It's mainly US, about 70%. In terms of individual stocks, it's top heavy. Other than that, expense ratio is not bad at all. So yeah, that's my take on this. And genuinely, if this was available on, if I wasn't interested in investing individual stocks myself, like the Microsofts and so on, I genuinely would have actually put a little bit of money, about 3-4% of my overall portfolio into something like that. If I wasn't investing in individual stocks in terms of the Microsoft, the Apples, the Nvidias, and so on, I would rather put money into this thing here. Okay, I completely forgot about, okay, if I can find it, that is, okay, and completely forgot about it, rather than just buy individual stocks. That's if I was a bit more cautious about the markets, and I was maybe a little bit worried about, you know, what might happen tomorrow, or, you know, stock market crashing or whatever. Basically, this is the kind of thing that will help you sleep well at night without having to worry about anything. Right, so I'm losing my voice, so we're going to stop there. I hope you enjoyed this video. If you have, please just like, subscribe, you know, to the channel. And thank you very much for everybody that have suggested things, or, you know, commented, liked the videos. It's helping, it's reaching out a lot more people. So I really, really appreciate that. Thank you. Again, I didn't know about this. The reason I started this channel is to actually share my journey, and actually you share it with me as well, your journeys and what you're doing. And someone suggested this ETF, and now hopefully we can all benefit from that, inshallah. Take care, everybody. Assalamu Alaikum.